Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure you subscribe. This is the place to go for high quality free trading education. Now, without further ado, let's jump straight onto the charts. In today's video, I want to speak about Euro USD because at the moment we do have quite interesting price action and structure. Now, as usual, I will be covering first the technicals, then we will move to the order flow in order to keep the video as educational as possible. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that we have a market which at the moment is testing a very strong monthly supply and resistance area. In fact, from here, during a very strong bearish move, the market created this candle here. So a candle with a green body, indicating that this is very strong previous monthly support, which now that the market has broken it to the downside and is approaching it from below, is currently acting as resistance. And as we're testing previous support and resistance, we could expect a potential rejection to the downside. Now, if we drop down on the weekly time frame, what do we have? Now, from a weekly perspective as well, we can notice how the market is in fact testing the previous high. From here, all this move to the downside was created. At the moment, we're testing exactly the previous high, from which there is a good probability of seeing a potential rejection to the downside. Going down on the daily, what do we have? Now, from a daily perspective, structure and price action are quite clear. We have a market which has just created this W formation. Now, in general, after the creation of a W, what you would expect is for the market to create a rejection to the downside to go and complete the pattern at the previous resistance turn support. Or in general, you would at least expect the market to create a retracement to the 0.32 of the Fibonacci taken on the impulse leg. Now, in this case, the impulse leg is from this low to this high. So if we take our Fibonacci from the low to the high, what we can see is that we have a 0.32 and 50% Fibonacci retracements lining up exactly at this area that we could expect this market to create a correction to. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, what we can see by looking at the euro is that with the last report, for the first time after months, we have seen net positions getting decreased instead of increased. We are starting to see profit taking on the longs. In fact, we had 29k longs getting closed, meaning that institutions are taking their profits at this high, and there is the possibility for a correction to this zone for the completion of the W formation. Now, you have to keep in mind that if you're checking data for the euro, you're actually already checking Euro USD, because all currencies on the spot are traded against the USD. So if you're checking the euro, you are already checking Euro USD. So there is definitely the possibility for this potential rejection lower. Now, how we could be approaching this? As usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the upside, waiting for the market to shift from an intraday bullish market as we would have to an intraday bearish market. And if the market would shift from an intraday bullish to bearish market and provide to us one of our valid entries at that point, we could be looking for a potential rejection lower for the market to complete the W formation at the neckline. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, that is all part of the mentorship program, which you can find at transparentfxtrading.com. Here you have the possibility to gain access to my entire course with all the rules of the strategies, You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here, past the testimonials, you will see that at the moment I'm running a special promotion in which you have a huge discount on the lifetime access price of the mentorship program from 497 euros all the way down to 97 euros, one-time payment. And since I have partnered with the forex broker Blueberry Markets, if you open an account with them from the student dashboard after you joined, you can get a full refund credited back into your trading account. And if you scroll lower, you will see that at the moment there is still time to join before the timer goes to 0 and the offer expires. However, spots are limited, so if they get filled before the timer goes to 0, the offer will end anyway. So I really suggest you take advantage and join directly from here to gain automatically access with the email and password that you will create during the checkout process. So definitely looking forward to have you on board. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you. And I will see you in my next breakdown.